Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Friday, April the 3rd, the year's 2020. Let's talk trading. Time for the weekly wrap up. I hope you fellow traders had a profitable week. And as you all know, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. Okay, disclaimer out of the way. Now, boys and girls and non-binary traders, remember, it's all about money and risk management. It's all about the Benjamins, right? So when you're trading, you have to make sure you don't lose any more than you're willing to lose on any one particular trade. And as Walmall says, it's easier to make up 2 pips or 5 pips than it is 10 pips. Looking at the week here on the euro, it 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 got slammed. It's really pushed back down. And as far as the weekly, we still have 4 pairs that did not fill the weekly gap. But that doesn't mean you didn't make money trading those. And on the year, you can see the euro is just down, 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 and down, year, month, day, week, and day. And yesterday it shot out of the opening range for the week. And you can see here it's continued going down. And 2 days ago it shot out of the inside bar of the daily and the inside bar for the monthly. Still some inside bar trades to happen here. Okay, today it looks like we've got, let's see, we can count them 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. About half the pairs over 100 pips in range, and with the euro clocking in at 92 and the pound dollar 197. So pound dollar more than twice. And as we look here, we missed the pivot on the daily. All signals. We had that one trigger here shooting for the pivot. You would have taken a loss, but you would have made it up. Obviously, going the other way using that method. The rat zone. This is the original rat zone indicator here. You can see we're in the rat zone. Time for green rats to feast. But remember, and I'll show you in a little bit, the smart rat zone. Because the stats, those 20 stats have changed. The 20 pips above the current low and below for the euro, that's too much. And once again, we missed the pivot on the pivot chart here. You can see here 1, 2, 3 missed pivots, 1 last month and 2 this month so far. The wick zone in and out on the top and out of the bottom. Nice trading there. And the Walmall method this hour, you can see it triggered once and you'd still be in that trade. But if you look back here, we've had some, actually, if you put the hour, turn this into an hour, you can see we opened here, triggered long, opened there. Right here, you got a short and a long trigger. Opened here, a long and a short. So once again, if you just want to scout for a couple of pips or so, this method is definitely proving profitable because you can't fit 20 inside of 10. Here, looking at the Walmall stats right here at 90. Now I want you to understand something. Crossing above means price crossed above but didn't close above. Above means it actually closed above. So it has to open below. So right here we had a open below, cross above, but it didn't close above. So that only counts as a cross above. Here we had an open below, a cross above, and a close below above. So that's what this is telling you. So you see, it actually crossed above over the last 1440 bars, crossed above this 90 line 44 times, but only closed above it 25. So that's a little bit better than half of the time. So right here, you can see there was slim pickings. So that bar only hit a high of 0.04. Didn't even give you a pip. 179,904. And then it just turned right around and reversed on you. So that would you'd be down right now unless you just took that point right off the table. Now I mentioned about the rat zone. Once again, using statistics, I created what I call the smart rat zone indicator, and I've loaded up 3 instances. So once again, my percent, this means 20% of the time, show me where price closed below and show me where it closed above. So, and I changed the indicator. So at the 20%, you can see here, this is the line, call it the 79. It closed below that line 20% at a time. Now, here at the 80 line, that's the 25%. It closed below there 25% at a time. So what exactly are we doing? We are looking at close minus low for the last 250 days, which is basically about a year's worth of trading. So if you took all those numbers, some might be, you could have like 10, 20, 5, 50, and you loaded them all up and then you sorted them. When you draw the line, you say, okay, what's 20% of 250? Well, that would be 50. So you look at the lowest 50, and it's like right here. Those low 50s would those low 50 close minus low results would all be in here. Okay, so if you look, so what you can do is, it doesn't go back, but you can see here how many times was, actually I need to put on the rat dots indicator to show that, but you've seen those before. So here, if you say, okay, 30% of the time, it would be to 83. In other words, for this daily wick, the close minus the low, would have been within this range 30% of the time, meaning the range here would be from 83 to 72. That is 11 pips. So that's what we're looking at. 30% of the time, close minus low was 11 pips or less. So that's why I created this smart rat zone, so we can see, because at 20 on the euro, I'm not even sure where that would be. So 20 pips. Let's say, let's look at 40, what happens. So 40% of the time, from here to here, 87 to 72 is 15. So once again, you can see here that the euro, if you use 20, you don't have that great of a statistical opportunity for the price to leave the rat zone. It would only leave it, what, 60% of the time? 3 out of 5 times. I like better odds. Wouldn't you prefer 4 out of 5 times and 3 out of 5? So that's how you use this new smart rat zone. You determine what percentage you want, and then it'll tell you, it will calculate those pips for you. Now, over here, I used an oldie but goodie, just the TRO above below indicator. So at this price level here, this current price, it's telling you how many times for the day price closed below it or price closed above it. So right here, 71% of the time price has closed above this over the past 14 days. That's what, almost 3 weeks worth of trading. So if you want, we could change that to, let's just change it to 20. So you've got a full 4 weeks of trading. So 80% of the time it's closed above this. So in other words, you could say, well, I'm going to go long here because based on recent statistics, I've got a 4 out of 5 chance of closing above this level. So when you use this in conjunction with the rat zone, you can see how you can put statistics on your side to be profitable. And once again, this is just, we're looking to make trades that sometimes make us a little, a handful of pips, and sometimes you can get a nice run out of it. But as you can see here, even on some of these nice runs, if you're not quick to take your profit off the table, it's going to take it back. Now, of course, here, if you were a red rat, you went short, you got the Magilla trade, and you feasted. But these green rats are barely feasting here. So, the bottom line is, fellow traders, when you put a trade on, everything else goes out the window. I was watching a movie last night, and they say, like in war, or was it the news? Something about you go into war with a plan, and then when the bullet starts flying, everything kind of changes. Because you really have to fight in the moment. Doesn't matter what your plan was. If things have changed radically, you better adapt quickly or you're going to be dead. It's kind of like same thing in trading. We might be wanting to trade out of this rat zone and pick up a profit here based on what some indicator's telling us. But the fact of the matter is, you put that trade on, it starts going against you. Now you're going to have to start making sure you don't lose more than you're willing to lose on that trade. And it's so hard to have that aha moment or flip the switch in your brain, because we're taught to believe in all these different things, these indicators, these price patterns, these bar patterns, these squiggly lines that tell you what price is going to do in the future. But the fact of the matter is, you trade in the moment. In fact, somebody asked me if I could put certain, leave some kind of, I think it was on the wall mall. He wanted to leave the zones up there. And it's kind of like, I was trying to explain to him, it's like, you can't trade this side of the chart. You got to trade this side. And the sweet spot lines are there. It's just whether or not, and you can look on the 1 hour chart. You can see, you want to know what price did. Well, here, it opened here, and it's right back in that same zone. So I don't really see what they're trying to see. Maybe they see something that I don't. But you can see what price did just looking at the lines. Where is it? From this hour to this hour. From this hour to this hour, from this hour, you can see it. In fact, I think I had a TRO map indicator or opens map or something where it can show you the open to where it is. So fellow traders, you just have to trade in the moment, and remember, it's not what you trade, it's how you trade it. So go out there, drain the banks, and you have a real safe weekend, and don't catch that coronavirus.